thing is that both gold and platinum broke out relative to gold, and they broke out above some major resistance levels. And I think this is a bullish thing. This is bullish for precious metals. It's not just a gold rally now. It is a precious metals rally. One of the problems is that our customers are waiting for a pullback. They're afraid to buy a gold at 3,400. Why? It's just going higher. Don't be afraid to buy it. Same thing with silver. How can people not want to buy silver at $36? I mean, that's ridiculously cheap. I mean, yes, you could be upset that you didn't buy it at $25 or you didn't buy it at $30. It's not like I didn't tell you not to buy it, but I'm telling you to buy it at $37 because it's going much higher. And again, it's not that gold and silver prices are necessarily going higher. The dollar is going lower.
According to advisors at SchiffGold, including renowned economist Peter Schiff, many investors are holding out for a dip to buy precious metals. However, with gold currently at $3,400 and silver at $36, Schiff believes these levels still represent a strong buying opportunity, especially considering the direction in which the market is heading. Gold prices edged higher on Monday morning and remain close to their all-time highs. One of the key drivers behind this strength is continued weakness in the US dollar, which supports the value of the precious metal. Interestingly, this upward momentum in gold is occurring despite positive developments in global trade, a factor that would typically reduce safe haven demand. However, the current macroeconomic environment continues to favor gold, as it tends to move inversely to the dollar. When the greenback loses strength, particularly against other fiat currencies, gold becomes more attractive and affordable for international buyers, driving its price higher. Peter Schiff emphasizes that the recent increase in gold and silver prices isn't just about rising demand. It's also a reflection of a weakening dollar. He explains that when the dollar falls in value against tangible assets like precious metals, those who have already secured their positions in gold and silver will be grateful they acted early. Silver has also drawn significant attention, though it entered a consolidation phase following profit-taking at the beginning of the week. Last week, silver surged to a 13-year high of $37.24, driven by geopolitical tensions. However, with news of a ceasefire between Israel and Iran, risk appetite improved and erased some of those recent gains. Still, the bullish demand outlook for silver, combined with a softer US dollar, has allowed the metal to hold steady above the key resistance level of $35. Peter Schiff cautions investors not to be swayed by short-term market dips, such as those caused by headline events like ceasefires or trade deals, calling them mere noise. Gold, silver, and mining stocks remain solid options to preserve wealth as fiat currencies continue to weaken. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop.
We had this pullback in gold and silver today on Friday, a gift horse. I was talking with some of the guys at SchiffGold, and they're telling me that one of the problems is that our customers are waiting for a pullback. They're afraid to buy a gold at 3,400. Why? It's just going higher. Don't be afraid to buy it. Same thing with silver. How can people not want to buy silver at $36? I mean, that's ridiculously cheap. I mean, yes, you could be upset that you didn't buy it at $25 or you didn't buy it at $30. It's not like I didn't tell you not to buy it, but I'm telling you to buy it at $37 because it's going much higher. And again, it's not that gold and silver prices are necessarily going higher. The dollar is going lower. And look at it. Look at it on foreign exchange markets. It's going down against all the other fiat currencies, but it's going to go down more against real money. So stop waiting for a pullback. And don't worry. Maybe days like today scare people. Oh, gold was down $50. Silver was down 75 cents. It doesn't matter. These declines won't even look, like a blip on a chart when you're looking back a few years from now. They're nothing. This is just noise. You have short-term traders that are getting in and reacting to the news, to the headlines. Oh, there's a ceasefire, sell gold. Oh, we have a trade deal, sell gold. When that happens, you buy gold, you buy silver. You're being given a gift. Take advantage of it. Don't look it in the mouth. And don't get greedy and hope for a bigger gift. Just take what the market gives you and buy these metals. I think the quick buy in platinum, like that big spike, I still like platinum, but it's not the steal that it was when I was getting you guys to buy it below 1,000, now that it's popped 40%. But silver, to me, still has a little bit of downside and massive upside. So you should be buying silver, calling up SchiffGold, and getting yourself some silver. Also, the mining stocks, they pulled back again today, 3 or 4% drop on the decline. But all these stocks, again, even though they're up 45, 50% on the year, something like that, they are ridiculously cheap. People still don't get what's going on. They have no idea how the game has changed, what's going to be happening to the dollar. And so they don't have any idea how profitable these mining companies are going to be. So you want to be loading up on this. And even though the U.S. stock market is at new highs, we're barely ahead on the year. I mean, we're out of the red, but the U.S. market looks like it's going backwards compared to the foreign markets. And that's because not only are foreign markets outperforming the U.S. market, but they have a tailwind of a weak dollar. And so if the euro is up 13% this year, that means you're up 13% on European stocks, even if they haven't gone up. So you have that huge advantage where you've already got a 13% gain before you've got a gain. And so when the dollar was strengthening, yes, that was a massive headwind against global returns. So if the dollar had been up 13%, then European stocks would have to rise 13% just to break even. Well, that's what the Europeans are looking at now in our market. If the dollar is down 13% against the euro, that means a European investing in U.S. stocks have to go up 13% just for the European to break even. Well, why should they invest in the U.S. to break even when they can make more money investing in their own markets and collect higher dividends? So you really need to move more money into our strategy, into the foreign stocks and bonds. My value strategy, contact the reps at Europe Pacific Asset Management about moving an account over. If you've already got an account, adding to it. In fact, the more money you can move out of overpriced U.S. stocks in an overvalued currency like the dollar, the more you can move into better valued foreign stocks and into currencies that are going to rise as the dollar falls, the better. The sooner you can do that, the better. And if you got a little rally in the U.S. stock market, sell into it. But recognize as the U.S. stock market is rallying, the dollar is still falling. And so that is basically undermining your gains. So the gains are nominal, not in real terms. You're still ending up with fewer euros or Swiss francs or pounds or yen to use to buy these foreign stocks. So the sooner you can get out of U.S. stocks.
The U.S. dollar has continued its downward slide, recently hitting a 3-year low against a basket of major currencies. The move followed a report by the Wall Street Journal indicating that President Trump is considering announcing his choice to replace Federal Reserve Chair Jerome Powell well before Powell's term expires in 11 months. This early move is seen as a reflection of Trump's growing dissatisfaction with Powell's reluctance to lower interest rates. This stance has placed additional political pressure on the Federal Reserve. Analysts warn that the dollar remains vulnerable to further losses, especially as the Fed comes under increasing pressure to ease monetary policy. On a technical level, the monthly chart shows a clear downward trend, with the dollar index set to close its 5th consecutive red month. Since peaking above the 110 level in mid-January, the index has dropped more than 12%, underscoring the severity of the decline. Recent geopolitical developments have further influenced market sentiment. A U.S.-brokered ceasefire between Israel and Iran has paused over 10 days of escalating conflict in the region. The resolution, facilitated by late-stage American intervention, shifted investor focus and triggered a broad pullback in the dollar. This easing in geopolitical tensions prompted a rally in rival currencies, while U.S. Treasury yields continued to decline, falling to multi-week lows. Peter Schiff points out that the dollar's weakness is not isolated. Over the past year, it has lost significant ground against a range of major currencies. It is down nearly 15% against the Swiss franc, around 11 to 12% against the British pound, and even the traditionally weak Japanese yen has appreciated by 7 to 8%. According to Schiff, this is not a temporary or isolated trend. The dollar is depreciating across the board, and all signs suggest this pattern will persist. Let's get back to the interview.
Now, of course, the Swiss franc has also lost purchasing power over that time. The cost of living has gone up. The price of gold has gone up a lot in terms of Swiss francs, but not nearly as much as it's gone up in terms of U.S. dollars. But again, the dollar is just not down against the euro and the Swiss franc. In fact, against the Swiss franc, the dollar is almost down 15% on the year against the Swiss franc. But it's down against the pound. I think the pound's up about 11 or 12% this year. Even the Japanese yen has bounced back 7 or 8% higher this year against the U.S. dollar. So the dollar is going down across the board, and it's going to continue to go down. Also, what's happened since my last podcast was we had a huge breakout in silver and platinum. Platinum in particular, about 6 weeks ago, I did a podcast in which I specifically pointed out what a great buy platinum was, because platinum was under $1,000 an ounce and gold was trading over 3,000. So I pointed out that you could buy 3 ounces of gold with 3 ounces of platinum with a single ounce of gold. Now, for most of my life, platinum was more expensive than gold. So now, not only was platinum cheaper than gold, but it was so cheap that you could buy 3 ounces of platinum for 1 ounce of gold. And so I said, this is a ridiculously low price for platinum. And I specifically recommended that people call up SchiffGold and buy some platinum. Well, yesterday, platinum traded for over $1,400 an ounce. I think it got to like $1,425. That was a 40% increase in the price of platinum just since I recommended it on this podcast about 6 weeks ago. Now, today, platinum was clobbered by $85. So it closed at $13.45-ish. So a big down day. In fact, all the metals had a big down day. Silver was down about 60 cents, or 75 cents, excuse me. But it closed at around $35.90. The last time I did a podcast, silver was still below 35, and 35 was major resistance. Well, we had a day between the last podcast and this one where silver was up almost $2, and it blew through 35 and went through 36. In fact, since my last podcast, silver almost traded $37 an ounce. Now, today was a big down day, 75 cents, and we closed the week just below 36. In fact, this is the lowest we've been since breaking out above 35. We closed at 35.90. Gold was also down about $60 today, closed around 32.75. The reason I believe that we had the weakness today in gold and silver, in addition to the fact that we've had a lot of strength in the stock market, and I think that's been a bit of a headwind, and that's why I think gold hasn't already made new highs, is because there's a lot of optimism now as people are moving back into these tech stocks, and so they don't feel as much of a need to have a risk-off hedge position on like gold. They're piling back into these risk assets. Was all the stories about progress on the trade front. Trump came out and said something about having a new deal with China. And look, I don't believe there's any deals going on. I mean, all the deals are is both sides agree to keep talking because they potentially might agree to come up with a deal or to agree on the terms of negotiating to come up with something, but they don't actually come up with anything, because really all they're trying to negotiate is to move away from what has been imposed since Liberation Day. We're just trying to bring the tariffs back down to where they were. We're trying to get China to open up its rare earths and its batteries and the things that we really need to buy from China that they were happy to sell us until Trump started this trade war. And now all we're trying to do is get back to where we were. But somehow this is going to be this great victory if all we can achieve is the status quo that we had before we launched a trade war that we couldn't win. But I think that talk, plus there was also something coming out of the White House that we're close to deals with Europe. We've got all kinds of supposed trade deals that we're about to sign. And this is just in time because the 90-day pause, right, that we instituted, that Trump called for after the bond market, started collapsing, getting yippy in Trump's words. And so he called off the reciprocal tariffs. It was a 90-day pause. And that pause is maybe about 2 weeks from being up. And so I think the fact that the White House was floating the news, I think, started yesterday or this morning, that we're very close to these deals with a number of European countries or maybe the entire European Union. I think that not only helped the stock market rally today, but I think that's a reason that we had the sell-off in gold. So we had a sell-off in gold when, we had the ceasefire with Israel and Iran, and oil prices came right back down. They had spiked up to $75 a barrel, something a little bit higher, I think, and then they collapsed back down to 65 when nothing happened, and gold got caught up in that, and I think we got a little bit more selling. But the significant thing is that both gold and platinum broke out relative to gold, and they broke out above some major resistance levels. And I think this is a bullish thing. This is bullish for precious metals. It's not just a gold rally now. It is a precious metals rally. We've got all the metals rising, palladium as well. And in fact, copper, which pulled back today, copper was back above $5 a pound yesterday. Copper's up 25% on the year. So we're not talking about just a precious metals market rally, just a safe haven rally, but the industrial metals are going up. Why is all this happening? This is all happening because of a weak dollar. This is happening because of inflation, which is also ironic. And I'm going to get to that in a minute. But, you have such a weak dollar, you still have so many people talking about how inflation is gone, how the inflation problem is solved. Everybody in the Trump administration is talking as if we've already achieved the 2% inflation target, right? And nobody can figure out why this idiot, this moron, right, this numbskull, this very stupid person, and these are all specific words that Donald Trump has used over the past couple of weeks with respect to Fed Chair Powell, because he's saying that how could Powell be so stupid, be such a numbskull, be such an idiot, not to be cutting interest rates? And he's talking again about having to fire Powell, because after all, how could we allow this complete and total moron to be Fed chair for another year? I mean, once you've accepted that the chairman of the Federal Reserve is a moron, well, you got to get rid of him. I mean, how could you allow a moron to be running the Federal Reserve? And there is a lot of talk that Trump is going to nominate somebody like a shadow Fed chairman, maybe in the next couple of weeks. But the point is, he may try to install that Fed chairman early and not allow Powell to serve out his term so that we can have rate cuts sooner, even though the Federal Reserve is indicating that rates are going to come down sometime between now and the end of the year. We're going to get a couple of rate cuts. So what's the point of even replacing Powell?
Amid a backdrop of currency shifts and geopolitical recalibrations, the precious metals market is quietly asserting its strength. The ongoing erosion of the dollar's global purchasing power, accelerated by political uncertainty and dovish monetary leanings, is reshaping investor behavior. What once were considered peak prices for gold and silver are increasingly being viewed as baseline levels in a redefined financial environment. Even brief market pullbacks tied to diplomatic breakthroughs or temporary calm seem unable to suppress the underlying demand for real assets. As inflation tolerance rises and fiat systems face mounting skepticism, the case for hard assets is shifting from speculation to preservation. Could today's perceived highs in gold and silver be remembered tomorrow as the last chance before a lasting revaluation unfolds? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.